Good morning, everybody. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, with another great episode for us. And of course, we have, because it's Tuesday, the one and only co-founder of Market, Nilabh. He's going to go over some fundamentals with us. Today is a very important today, especially for people who trade things like the NASDAQ and S&P, and it will also have an impact on gold. So today we have the U.S. unemployment rate. It's major. It comes out in about 5 minutes. So make sure you stick around. We're going to break it down as it comes in. We're going to use Market to break it down as well. So I hope you're ready. Smash that like button because Market in the Morning starts right now. Yo, Nilabh, good morning, bro.
How's it going, Kevin?
Going good, man. Happy Tuesday.
morning,
You
good
ready for
morning.
this unemployment?
Yes, we are. Should we jump right into it?
Dude, let's do it. I want to
Let's
know what's
jump
cooking.
absolutely right into it. Okay, so we have a large set of labor market data. Let's prep for it. We got 5 minutes. Let's see how quickly we can prep for this. We'll click on first unemployment rate. Let me zoom in a bit because I know it can be hard to see sometimes. But is that better? You can see the numbers
Perfect.
clearly?
Yeah, that's better.
So unemployment rate for US dollar, you can see it guides Fed's pace of future rate cuts. So it's very important. And you can also see over here that it's in focus because Fed's easing path hinges on like labor market slacking. There being cracks in the labor market, right? So minimum, we're expecting a 4.3, maximum 4.6 bank forecast, and the regular forecast is a 4.4. So that's the playbook that we currently have. Anything above a 4.6 is very bearish. When you're above 4.5, it's bearish, right? And then on range of the expectations will most likely be ranging and it'll be mixed market reaction just because that's already being expected by the markets, right? And then below the minimum, you would get a more bullish dollar and even at like right at like 4.4, 4.3 and below 4.3 would be bullish and very bullish, right? So a little snippet here, a higher than 4.6 print is very bearish as it implies further labor deterioration and more aggressive rate cuts. If unemployment rate jumps up to 4.6 or above, that is showing slack in the labor market. That is going to put pressure on the dollar because it results in markets pricing in upcoming expected rate cuts. Now let's look at NFP. Maximum 150K, minimum minus 20K jobs, and then forecasting is just 50 at the moment, right? So here, a larger print, so 80 or 150 above, you're expecting a bullish and very bullish reading because more jobs, better for the dollar, better for economy, opposite on how the unemployment rate impact is, right? So bullish USD, if there's lots of jobs being made, that is going to be fewer rate cuts. We're going to price in delayed rate cuts. That's what the market will price in, right? And then we also have average hourly earnings. But the main things in focus are NFP and unemployment rate, right? We'll be watching unemployment rate because that is going to be used as a better gauge. And Fed's dual mandate has always been maximum employment and keeping inflation at baseline 2% levels, right? That's what the Fed goes for when they when they tighten or ease their monetary policy and the flow of capital. So we have this data coming out in about 3 minutes, but let's just quickly look at the charts a bit. So when we're looking at gold, we can see gold is still holding its intraday bullish bias with Fed cuts rate for the third time, right? Powell rules out hikes last week. So now when we look at it, we can see that we do have a target of 43.20 in the bullish time frame, but we also have some space to pull back. Same with the zone that I have marked up here is that gold we could see some whipsaw price action happening on the data release, but we'll watch and see how the data comes out, in what direction it comes out, and as well as how the markets will digest it, because that's just as important. Is that data could come out in a certain way where the markets act in a more of a ranging manner, right? So it all depends on how data comes out, and at the same time, we'll also be watching any upcoming headlines that come into our news feed. But hopefully that made sense. We did in 2.5 minutes. We looked at the playbook. We understood what's going to happen, mapped out these scenarios, and now we also looked at the chart, right? So we'll watch dollar as well. We'll see how markets react when.
Nilabh, do you mind pulling up on Market the economy tab? Because that's going to show us a little bit of a chart of how the unemployment rate has been rising. And if we look at since July it sloped down to 4.10. Since then, it's been on an incline.
Yeah.
So I want to see, we're at 4.4 now and it's been increasing. Are we going to hit 4.5? They said if we hit 4.7 is the only way that would sort of force another rate cut in January, but
Yeah,
it's it's
I think we'll still, like, the Fed was expecting 4.6
yeah.
um,
Yeah, it's going
unemployment
to be
rate earlier
close.
this year. They were expecting it by the end of the year, the unemployment rate would be in the range of 4.5 to 4.6, right? Let's just quickly jump back to the calendar so we can await this release.
That's
And
crazy, man, how high unemployment is right now.
yeah, right. And we'll see how dollar reacts. So we got 8 seconds till the fireworks, and we'll watch the playbook.
Oh yeah, look at that, guys. News
Okay.
comes out right now.
Good morning. Good morning.
Good morning, guys. Quick reaction on equities to the upside, same with gold for the moment.
Yeah, we're seeing dollar pushing down. Wait for the data to come in. Okay, unemployment rate rose to 4.6, guys. We're
Yeah.
still below the we're right on the maximum. So we are expecting a bearish dollar, right? NFP also just slightly above the forecast of 50, largely below 150K maximum forecast. So bullish for the dollar, bearish for the dollar, but I think unemployment rate is going to hold more weight here because you can see we're above the bank forecast by 0.2%. We're also right on the maximum, right? So let's just watch the reaction on dollar. At this point, it's going to mean that gold's going to continue to head towards the upside. Give or take any minor pullbacks that you see, but we should be heading up into market's target over here. Let's open up on this tab. We should be heading up into market's target of 43.20. So let's watch there. And we can see we're already pushing up in lower time frame. We might get some sort of pullback to just create a higher low, grab some further buyers in the market before continuing towards the upside. Maybe 4,300 would be an area that I would be watching if we were tapping into. But looking at the data that came out, we also had average hourly earnings year over year reading drop below the forecast, still above the minimum, but it is below the forecast of both the bank forecast and the regular forecast. So see, this is what I mean. It's so easy to understand how this data is going to come out. When you have the reading come out, it's telling you it's in focus. Boom, 4.6 reading, unemployment rate goes up. We entered this playbook. We are going to see a bearish dollar. Look at this, guys. This is not magic. This is engineered craft. This is beauty in the making, right? And this is exactly how we intended it for it to be playing out. And you can see we did this live. We hopped on at 8:25 a.m. Eastern. Data was in 5 minutes. It took us 2 minutes to prepare, understand the scenarios, and now look where we're headed. On gold, we're continuing beautifully above 4,300, and we're going to head up into 43.20s, right? Which also we'll see how we get a reaction here in this price area. But once we break this, we're going straight to like 20, 25 on gold. Dollar is just continuing to see this outflows. And if we look more on the intraday time frame, we have just broken below this swing low that we had all the way
Wow.
in October, right? So
Yep.
dollar is in like free fall. We're filling this gap over here at current moment, and then we're also going to just probably head down into 97.5. So over the course of the week, we can expect to see with this labor market data showing cracks in the labor market. You can clearly see we've entered this bearish playbook. Let's just quickly look at our news feed where we have high impact headline talking about non-farm payrolls plus 64,000, right? October's non-farm payroll were minus 105 as well, which is also going to weigh in on the dollar as well. And you can see a shock negative NFP print during missing data period would imply sudden labor deterioration. Not only do we see that in October's NFP data, but we also see it in the unemployment rate that we were just looking at, which is right. That's the U7, but here we should
Don't
have the
forget to show
headlines.
members the brain icon on those.
Yeah, absolutely. So if we click this, you can see what this means. Bullish for gold, bearish for dollar because bearish impact impacted by high impact headlines. And we're looking at dollar right now. Dollar 1 minute is still holding bearish. We could get a potential pullback into, let's say, like right here before selling it off, or even like up here. We
Yep.
could see a pullback, but I do believe that we're going to continue to see dollar bears as we also are seeing the inverse effect on gold because gold performs better in a lower rate environment. So anytime you see labor market deterioration, talking about how Feds um, were expecting upcoming further rate cuts, we're going to see gold continue to pump up, right? So just give or take any pullbacks, we'll be watching, but we should be looking to head up into at least 43.18 area, and then we'll see if once we break above that.
Dude, this is awesome, guys. You're getting your trade setups today. Whenever we have economic news, we're live Tuesdays and Thursdays, and we know we get news some Thursdays and obviously some Tuesdays as well. Wednesdays, we have FOMC. But for those morning news, the economic news, make sure you like and follow because we're going to be covering them whether it's Tuesday, Thursday, here with Nilabh and myself, or me and Jeev on Thursdays. So definitely make sure you follow to have the right insight and right bias of the market.
Yeah. So let's see how markets digest this data.
I'd love to see a pullback on gold. Like you said, a pullback on the dollar too to the upside into that range.
Yeah, we'll see how we react to this area. This is why we mapped out
Yep.
a zone, right? Because a possible area of interest, and we're clearly tapping into that at the moment.
Yeah.
So, but I do think this unemployment rate is going to hold weight on the markets, right? So
Yep.
we're going to see that bearish dollar. We just need to see where that pullback kind of dies out because this is the markets, right? Markets aren't always going to move in a single straight line in the direction where you're expecting it to.
Right.
So, or you're planning for. That's why you have to plan for these deeper scenarios that, yeah, we need to see how this 15-minute closes as well, right?
Yep.
Like we just pushed quite down. We created a new lower low. Dollar's been on a downfall since end of November. So let's continue to monitor how price reacts to this area as well as how the data holds weight.
Absolutely. Absolutely. Very important stuff, guys. The technicals are always important to check to make sure they line up, but fundamentals are just as important, if not more important, because let's say you were short on gold today, and then we have the fundamentals start saying, "Hey, we're bullish." And then we also have the technicals also swinging to the buy side. Well, then what's really telling you to go bearish? If
Yeah,
there's nothing lining up giving you an A plus setup, whether you use a technical analysis, supply and demand, use fundamentals to co-align with it to give you that correlation and confidence in your trade, but trading one without the other, you got to trade them together. Especially if you're
exactly.
trading technicals, you got to have that fundamental piece or else you're trading blind.
Yeah, good point. And over here, we can also see that Fed funds futures slightly raise odds of rate cut in January after jobs data to 31% versus 22% just before, right? A 9% increase in rate cut odds for January because of the deteriorating labor market data that we just broke down, right? Look how easy this was, Kevin. This is exactly what the market team had in mind when we were designing this economic calendar. You click on the brain icon, you get a playbook, you see, wow, we're actually very bearish. We're very bearish. Dollar
Yep.
continues to sell off. You mark off points where if we get a pullback, you can see clean reaction. We've seen that reaction so far. So let's see if we can now continue to see the outflows on dollar, given that we have just retested this lower time frame price point, as well as gold is now just bouncing above 43.05. So we do look good to head up into there. Looks like unemployment rate is holding weight at just as we mentioned it would, because this is the more in focus figure than all the other data as well.
Absolutely. If it's got that big of an impact on the Fed rate decision, guys, it's a big economic event. And with the market update, like we saw with the, let's see, when we go to economic calendar, it's got the what was it called? Right, the in focus
In
tab.
focus right
It's
here.
going to tell you if it's important or not. If you hit a report that's not important, plus it's not going to have that.
Someone's cut some
Sorry
allergy.
about that.
No worries. So even on NFP, you can see that tier one data post Fed meeting awaited a mid labor focus, right? Same thing. The Fed's focus always maximum employment and keeping inflation at their baseline target. So you can clearly see inflation is still not at the baseline target.
Yep.
They're focused on maximum employment. Whenever they do see cracks in the labor market, they just need to cut. Like you need to cut. You need to stimulate the economy. You need to get money flowing, just so jobs are being created.
Absolutely.
So yeah,
I like that gold chart you had there with the resistance point. So something I would like to see, guys, with that area that Nilabh had was if we could break above that. What's that? 43.14.
Yeah, 15 to 20 area. We
Yep.
break above it. You could see a retest and then head up into like 20s, 25s over here, right? Before we see further upside. Let me just zoom out a bit on the entry. Like this is the area that we need to break above before we really start inching up to the highs, right? Like
Yep.
if we don't break above this, or we get some sort of reaction, then maybe we get a pullback, and that pullback just gets further buyers in the market before we can continue towards the upside, right? Because it
Right.
does look like we saw buyers jump back in here,
But we want to
right?
make sure too not to
Yeah,
buy
you
these
would need
highs.
for the next area. Yeah, exactly. For continuation, either we don't break this right now, pull back a bit to the back to the lows over here, or we see a break towards the upside, and then maybe in the next intraday sessions we continue to see price climbing as unemployment rate is going up. We did see rate cut probabilities favor in the favor. You can see now market users are also reacting to this. It's become a hot headline, right? So more we see that holding true, then we'll continue to see gold climb towards the upside. We'll see dollar continue to see bearish price action on the intraday time frame, give or take those little pullbacks we were talking about, right? Market's going to do what the market wants to do. You just have to make sure that you are positioned in a manner where you're not looking for sells as we're at these lows. Like you're looking for sells on these intraday lower highs, or you're looking for buys at like major demand areas. This is the main thing, is that you can easily catch these continuation plays when you know what's happening. But if you're reacting out of just impulse, it becomes way harder on your psyche to operate with clarity,
Yep.
given that you need to be absolutely clear when you're a day trader. Like you can't be overly reactive. Like you can't see four bullish candles and try to buy the high of the fifth one. Right? That you're just shooting yourself. You're just increasing the probabilities that you've shot yourself in the foot now. So
Dude, exactly.
exactly, right?
We
So
don't
when
want to
you
catch a
do
falling knife, just like we don't want to jump in front of a moving bus.
exactly, that's very good analogy.
You know, if the markets are moving fast, but you also don't want to jump on the other side. If we're moving higher, you don't want to have the mindset of, oh, well, we can't keep moving higher. I'm going to short it now, because then you're fighting against the trend too. So you have to remember psychology plays such a massive role. So when we find things like fundamentals, like what we have with market, that's something that's not emotional. There's no connection to it. There's nothing that's, oh, a little, oh, well, it could be taken like this. No, this is all economic data, and it's telling you how it's going to impact the market. That is not subjective. This is data backed.
Yeah, yeah, absolutely.
Any Trump news today? How's our Trump tracker looking?
Trump doesn't seem like Trump is not much high risk score. We're sitting at a low score of 15.
Yeah, he's been
Few
quiet
meetings, but I don't think he has anything too too important in terms of things that are currently in focus, right?
good.
Nothing. Yeah.
Always a good thing when that's a little on the quiet side.
Yeah, I don't know, man. Kind of love the Trump volatility. Not gonna lie, like it's probably the best season in the markets is when Trump is speaking.
Yeah,
You know,
dude,
when
he's
he has
something,
that
man.
extra energy after a nice round of golf in Mar-a-Lago. Now he's won a few games, he's won a few rounds.
Yeah, gets a little Twitter happy.
Exactly. Yeah, one of the Twitter fingers.
What else? So could we take a look at the S&P or NASDAQ today?
Ooh,
I know a lot of
let's
people
have a look.
trade the NQ or what is the, I think it's US 100 for Forex.
Yeah, yeah. We can look at ES. I
Cool.
think I have all my charts marked up on ES. So ES as well. I would like to see us back above 6,900 in order
Yep.
to continue. But we did just create like a higher like this range that we were in. We're still quite bullish, right? Like, but intraday is seeing these lower lows, lower highs form. In order for structure to like shift towards the upside, in my opinion, we would need to see us break past this rejection point here. All right, let me just circle it.
Oh, something else to note, guys. If you do use TradingView and you use like ES1 exclamation point, you see how Nilabh had the B adjust on in the bottom right? So when futures contracts roll over for ES and NQ, I think it's every 4 months. No, it's every 3 months. It's 4 times a year. the drawings will adjust. So they'll completely jump scale. I'm going to share my screen for a second
Yeah,
just to
do it
show
for
you
sure.
guys what I mean. So like right here on the ES, this zone that I had, I didn't map it out down here. That's weird. It was mapped out originally up here. But because we had a contract rollover, that's right here, where we roll over from the ESZ, the December contracts, to the ESH 2026, the March contracts. When we have B adjust on down here, it automatically adjusts the chart. So there's no weird contract gap like this one. But in response to that, it moves all of your drawings. So if you do want to change that and fix that real quick, you just use the measurement tool, find one of your original drawings, let's say 6850 to about 6908, and just do the math. 6908 minus, what would we say, 6850 is 58 points. So just come over to the object tree, click your top drawing, scroll all the way down, hold shift, click the bottom, and then you're going to click your settings on those drawings. Go over to displacement, and then what we say, 58 points, we're gonna do plus 58, and now it's all fixed.
Wow, I actually didn't even know that. That's very, very cool.
Yep, you got it. I know
Also
it wasn't too
annoying though,
market
because
related, but when we're trading with
yeah,
TradingView while using market for our analysis, it's helpful to have all our drawings in place.
yeah, 100%. What's your analysis for ES, Kevin? What do you have
I'd
in?
love to see. Let's see. I mean, we've really been breaking lower. I always like to look at the daily time frame first, getting a bit of idea of have we been breaking previous day highs and lows. I see since Wednesday, even though we had a green day Wednesday and Thursday, we still broke that previous day low. So
Yeah,
since last Tuesday, broke previous day low, broke previous day low. We've been on a bit of a previous day low broken streak. And I've also seen on this breakdown right here, this big massive sell candle, we had a lot of volume with it too. And
yeah,
if we get a big sell like that and we don't have volume, a lot of times that could be profit taking. And that's fine, right? Then we'll look for a pullback. But if we get a big move to the downside and it has volume, that's more of a panic selling. And with panic selling, that usually has some follow through as we've seen so far. It's really a tough point right now. I feel like up until this area, we were really riding off the highs of the optimism of the rate cuts, right?
yeah,
Then we had, okay, definitely, definitely. And then December comes around. Powell says, oh, I'm not too sure about it. Not even. It was October when he said, I'm not too sure about the December. Starts dipping a bit. We dropped about 6% on the S&P to the downside. Of course, we were able to make our way all the way back up. But at this point, it's a much tougher read because we're trying to make some lower lows over here. We're possibly trying to make some lower highs over here too off of these highs. I'd really want to see like how, so we saw the employment rate come in. I want to see our intraday price action and volume on the S&P and NASDAQ to see if that unemployment rate that we were looking at from market is going to have that bit of a bullish impact on the S&P and NASDAQ. Are we going to find buyers
yeah,
because unemployment is pushing for more rate cuts? Or was unemployment not weak enough and it's still in a bit of a standstill? And if that's the case, I see that we're just sort of dropping lower, dropping lower. I'd want to sort of try to find some resistance to short a pullback because I also see the buyers, they chop up, but the sellers, they take the elevator down. They just completely fall off the map.
yeah,
So if we get that same reaction, I'm going to want to trade that direction.
yeah. That makes sense. That makes perfect sense.
But I definitely want to see, man, that economic news today, that's what I consider a catalyst.
Yeah, the catalyst markets are pulling back a bit.
Yep.
Gold pulled back. We're seeing dollar push a bit higher. Data overall is still bearish for the dollar, right? Markets are still going to price in upcoming rate cuts. January rate cut odds have increased, so that both supports bulls on equities, right? In intraday bias that adds to it, that supports that bias. It supports the intraday bullish bias for gold as well, because you see labor market deteriorating. People are going to pool money into safe havens,
Yep.
increase in rate cut odds. Gold performs better in a lower rate environment, right? And that's bearish on the dollar, and that adds
Yeah.
to the bearish dollar supporting bias factors, right? So we just have to see where the markets really calm down. We are seeing some whipsaws in the market, right? Just regular movement after news. We got that initial reaction. We can see the bearish dollars, the algos triggering. We saw dollars sell off. Buyers grab the dip, and we're seeing a pullback. But we'll see where this intraday pullback could go to as well, right? Because we did just react off 98. We didn't close below that. This below this swing low. So we'll see how this 1 hour candle currently closes an intraday one. But did you check out Tesla yesterday? Tesla was booming yesterday.
I heard about that. What was going on? They have some
Dude,
news or
Tesla has
something?
just been I've been buying the dip since here.
That's awesome, bro.
Tesla has been the nicest hold this year,
Oh yeah.
right? We've
Yep.
almost doubled from
Yeah,
the
look at that.
tantrum. Yep.
Wow.
Crazy.
Yep. 108% off of the April
And then
lows.
this one, I remember this candle. Do you know what this candle was, Kevin?
Which one? Oh wait, hold up. Let me bring up your chart.
Okay.
We'll chart hop, guys.
Yeah, we'll chart up.
Duck chart.
This candle right here on
Beautiful.
June 5th, sorry. Do you remember what this was?
June 5th. No, what was that? Oh, was that the Doge?
No, I'll show you. I'll show you.
Let's let market break it down.
If there was
Oh
a
yeah, there we
tool,
go. Beautiful.
if there was a tool that could take us back, and then we could click that candle,
Yep. And
I
hey,
wish
look at
we had
that.
a tool like that. But
Beautiful.
so over here, oops, did we go a little too far back? No, I think we're good. So this is, I think this went a bit too far back.
That big drop candle, it was on June 5th.
Yeah, June 5th.
Yeah.
Right here. Okay, so this candle, I'm going to tell you before I even click it. Let's see if I'm right. This candle on Tesla was Trump and Elon battling it off on Twitter. Do you remember that? Do you remember that
Yeah,
fight?
I do.
Where they were just going off, where Elon was like, Trump's in the Epstein files,
Oh my
right?
god. Oh
So,
yeah, dude, that got bad. That got
right? Yeah,
crazy.
that got super bad. But let's see if it'll pick it up. It was either there or it's one of these big candles,
Yeah.
right? Yeah, here we go. Trump threatens to terminate Musk's government contracts over tax cut bill fund. So sick, right? And you can clearly see the headlines where the headlines come in. Trump says easiest way to save money is to terminate Musk contracts.
Wow.
Tesla shares down 12.1%. Trump suggests he may terminate government contracts and subsidies given to Elon Musk's companies.
Wow.
Yeah.
Talk
So,
about
guys,
petty.
we reacted to that 4,300 level that we were talking about, right? That we could push back. So see if we can either get some sort of double bottom in this area or maybe even just straight up continue towards the upside.
Yep.
Let's have a look at dollar lower time frame. Dollar is just pulling up into this area. Not much going on the dollar. Let's see if it can top off here because that data is still bearish on dollar, right? It's still bearish on dollar. We should continue to see bullish price action on gold because the data clearly supports that. But cool functionality, huh? You can just quickly come in here, see what happened. You see a random massive candle. You're like, oh shit, what happened here, right? Do you know what happened here? What this candle was?
Which one? What are we looking at?
Tesla.
Oh, Tesla. Oh, that big one, the green one.
Or we could do something like here. What was
Well,
this?
we know that start over there is Trump saying, "I'm just kidding about tariffs."
It's like deals are in the works.
Yeah, yeah,
Deals are in the
we're
works.
making deals. 90-day stay.
Yeah,
Woohoo!
90-day.
Buy now. He literally tweeted, "Now's a good time to buy." Like,
Yeah, that was come on, like that is one of the most legendary moves a president could have done to help the public. That was a help to the public too,
yeah, no, you're absolutely right. He could have kept it to himself. He could have kept it in
Or
a
just told it
private
to his
chat.
boys, right?
Absolutely. Got a comment saying, amazing job you guys are doing with market AI and new features on the economic calendar. Thank you,
Thank you so
Rohan.
much, man. Thank you so much. We appreciate it. It means a lot. We have a bunch more stuff coming too. Don't want to just talk about it too soon, but a ton of new stuff coming to the calendar. We heard a lot of feedback from users regarding the UI, regarding the functionality. We heard both the good, we heard both the bad, and we're improving on it. So thank you all for your feedback. It's been great. If you ever have any feedback, you can always press this feedback button in the sidebar and then quickly submit anything you want, or you can just reach out to support, and the market team will get back to you within minutes, right? You can let us know if you have any feedback here or if you have any questions as well. So both ways you can just reach out to us or hit up Kevin or myself. We're always there to listen.
Heck
Um,
yeah.
right.
Guys, shoot us some messages. Definitely follow on social media if you're not already. Market_AI for all social media platforms. Nilabh, if you want to drop your social media too in the private chat as well, it's up to you, whatever you want.
Yeah.
And my tag, I think, is down over there as well. Trading with Kev. That's for Instagram. It's Trade with Kev for X. Somebody had trading. We're gonna have to message him.
There you
Nilabh,
go.
got you, bro. Got you. Let's throw that
So
in there.
you know what I'd like to do? I don't know if you invest in long-term stocks, but I've had Tesla since about 230s is when I started buying. To the midst of this, my average price is 265, I believe.
Oh
So
wow.
I'm looking to hold. I'm literally looking to hold this into 550s. I think we're gonna get 550s in the next 2 months. So it's not that far away. And Tesla has such high volatility that when you do get these bearish plays, like we went from 345
Yeah.
to 430 in 2 days.
Yep.
So, and 550 is only $75 away. So I think we could easily get that, create a new high on Tesla. Gold's back up 100 pips from 4,300 call, right?
Wow. Crazy, guys.
Dollar,
Live
I think,
here.
may have topped off too. We'll see how we react to this high if we push back up into it. But as I was saying, the data is bearish for dollar, right? It
Yep.
didn't. It wasn't bullish for dollar. It was completely. We were in the very bearish scenario. We got a little bit of initial reaction off the data, off algorithms triggering. We did a pullback, whipsaw, classic move that happens during news plays at times, because we have to keep in mind we were still at the maximum. Imagine if this was 4.7. If this was 4.7 and we were already above the prior, like you're above the
Yeah.
maximum now, you're above the forecast. Now you could have seen complete outflows in on dollar happen, right? Without any pullback. So you always have to keep that in mind, is that we're on maximum forecast. So this was already in the expected ranges, right? Now, if I open up a calendar like Forex Factory,
Lame.
we go to unemployment rate, like they don't tell you much. Like yes,
Yep.
this is bad for the dollars, 4.6, but you don't have any other contextual information to tell you, hey, but we're still within the maximum expected range that these institutional desks were watching, right? So
Yep.
that's where this range comes in, is that you can clearly see the reaction. Yes, we had the initial reaction, but we also did get a pullback. We didn't just see clear sells on dollar like we did in last week's initial jobless claims. We just, in that case, we just saw straight sell off, right? So keep that in mind. Yeah, see, we top, and this is where I meant, like, we could just pull back into here, retest, then continue towards the downside. Or once we're back below 98 on dollar index, we could also just continue back to these lows.
Would also say on the dollar index, take a look at the 5 minute as well. Got to be careful when we're on the one. One is great for that momentum, but it could throw you off if you're a little too zoomed in. Like that
Exactly.
that pullback we had almost looked like, oh, a market structure shift. We broke those recent little pivot highs, but on the 5, it's pretty clear that we're still making some lower highs too.
Yeah, and that's a great reminder, is that you can't just get stuck on the price action. Like, you need to know
Yep.
the supporting factors.
Yep.
Like, imagine this: you had no idea of this data, you see price push back down here, and now you see it climb back up and pushing up. Most people are going to think this is bullish. They don't realize that this is most likely just a liquidity move. Price is going to top off because dollar is bearish. Unemployment rate just rose 0.22%. We're right at the maximum, above the forecast. What does that result into? A very bearish reading for dollar, right? So, a bearish reading, because we're not above 4.6. We're above 4.5, right? So it's bearish reading. So
Right.
that's clearly what we got. We got that bearish play. We're still getting sellers jump back in. It looks like sellers jump back into dollar sells, and buyers are continued gold from the 4,300 pullback that we were talking about, which if you took advantage of it, now that's over 100 pips, right? So over $11 move on gold right there.
Massive, guys. Massive. All here live on the Market in the Morning show. Make sure you guys like and subscribe. Join us Tuesdays and Thursdays.
Yep. I'm liking how this 15 minutes going to close. And also it's the 1 hour closure. We're also going to get the 4 hour candle on dollars going to close in 2 hours. But I sometimes look at the 2 hours. So the 2 hour candle is closing.
Yep. Yeah. Yeah, let's see the 2 hour.
Yeah,
So
this is
you have the
nice.
2 hour closing now?
This is great price action. Gold is going to continue 43.15, 43.20. And this is where we have that market target as well, right? Like you can see, we're approaching that 43.20 market target that we have on the intraday time frame. And what supports this bias? Labor downside risks acknowledged. See how fast market picks it up? Boom. I don't want to
Huge.
hear none of these other platforms talking about it. All right. And we're going to push up into 15, into 20. And that's where the first market target is, right? And at the same time, all fueled by today's labor market data that was broken down in real time. We prepped for it within 2 minutes, guys. It took us 2 minutes to understand where markets are going to go. And then we mapped out scenarios. We waited for data release. Scenarios played out in supporting of our bearish dollar bias, right? But if data didn't come out this way, then we also have a playbook for the opposite side, both NFP, on unemployment rate, on average hourly earnings, right? So you can clearly see that there's a lot. It's not as hard as people used to think trading
Yep.
the news or understanding these data releases. When you don't have any contextual information or somebody guiding you, then you're stuck with calendars like this, which aren't going to necessarily put you ahead of the game. They're just going to leave you more guessing. You're going to have to do more work versus you come to markets calendar. Let me prep. Boom, 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 boom. 2 minutes in, now you're ready. You feel like James Bond. You're sipping on your coffee, ready to execute the trade, waiting for the fastest calendar to release the data. What more could you want? You know,
Bro,
what
it's
more
too
could
easy.
you want? And look at that. Boom. This is what I meant. This was just a whipsaw move. And we called it in real time. We're like, guys, don't worry about dollar pushing up. This is likely a liquidity move. Now, if we come below 98, we're going to crawl back down to 97.9, right? But clearly, you can see dollar bears are holding. Like dollar bears are still holding. We just got a new hourly candle open. So we'll see how price sets up into this new 9 a.m. candle. We're 30 minutes before New York Stock Exchange open as well.
Yep.
So that'll be opening soon. We'll go back to the indexes as well. We'll look at ES. ES is still in that similar bearish. So this data also supports bulls on ES, right? We have to keep that in mind because equities perform better in a lower rate environment. Currently on intraday, we are seeing a bit more bearish price action forming, just some corrective structure happening, right? Doesn't necessarily change the higher time frame bias of ES, but we can still see that slightly bearish on intraday, right? And on higher time frame that we are still holding that bullish bias. So keep that in mind on ES. Dollar, again, we're just switching back and forth here, but our gold trade has played out fairly well.
Yeah. Yeah, looks like it's trying to break that resistance point that we had as well.
Yep. And I
Like that.
think once we break that, like it'll tap
Boom.
right into 20. Like this will tap straight into 20. We'll go back to gold on
Here
the
it
intraday
comes.
right here. We're heading right into it. See? Let's see how it's
Boom.
played out.
Massive, guys. There it is. Guys, it doesn't get much better than that. We're breaking down the economic data while it comes out, giving you the right bias, showing you guys the right setups. This is top tier. It doesn't get much better than this.
Yeah, exactly. And you can see dollar also. I can start to see a break below 98, given a pullback or so, right?
Yep.
Because we just corrected this entire 50% of this pull move has been corrected. So we're basically fading out this move. So we'll see how dollar progresses into this 9 a.m. Eastern candle. But there it is, guys. Target hit. Look, beautiful. Somebody take a screenshot right there. Somebody take a
Put
screenshot
that.
of this. Look at this. Labor downside risks acknowledged, right? Supporting the bias. We had market tell us unemployment rate being at 4.6% is bearish. We're in the bearish playbook scenario. And why does this matter? Because this data is in focus. Why is it
Boom.
in focus? Because Fed's easing path hinges on labor slack. What did we just get? Labor slack data, guys. And what does that mean? We we saw bulls on gold clearly played out right to the market target. Guys, it really doesn't get easier. I don't know what
Right?
I
Like, what
can do.
more do you guys
I don't know
want?
what else I can do. I'm begging you. Just
That's
start to
crazy.
use it.
And again, it's not like we have to emphasize enough too, guys, that we're not it's not a $500 product a month. We're not asking we don't want $1,000 a month. We should with how we're breaking things down. Institutional level wise, this should be a $200 a month, $300 a month product.
Yeah,
Just $50 a month right now
yeah.
to
And
get these insights, to get this data, to save your time. Time is money, and to be able to break down the economic data like we did this morning in just 2 minutes and be
2 minutes.
prepared is mind-blowing. That would take people hours to figure out.
Yeah, exactly. 100%. So just to recap, also keep in mind, like one thing I want to mention is that we're going to be increasing prices for market in come January, February time. So
Oh,
we're still determining a more fair price because we have remained the same price as we did when we launched a year ago, and there's been way more value added onto market. So I'm actually very excited for our price increase because not only is it going to build a better market, but it's also what the platform deserves and it's what the platform is worth as well. So the entire team is quite excited. We have so much more stuff coming, but we'll be keeping you guys up to date on that. And yeah, just to recap, gold clean buys, guys. Almost a $20 move from the point of interest that we were talking about, right? Supported by our bearish dollar data, fueled by unemployment rate. NFP came out more in the ranging because we're slightly above the forecast, right? But we are within the minimum and maximum, and we're below the prior, a bit more neutral, and then average hourly earnings also on right below forecast, right, but above the minimum. So we're on that 3.5, a bit more neutral. So unemployment rate is what is holding weight. This is what's fueling the dollar bears currently. It's what's fueling the gold buys. So just keep that in mind. And this has been another fantastic session where we walked everybody through a very important data release. Same as last week when we did initial jobless claims on Thursday. We walked them through that, where again we saw gold bulls come into play, dollar bears come into play, and exactly off the market playbook.
Amazing, guys. Amazing stuff. Guys, if you enjoyed today's Market in the Morning episode, make sure you smash that like and subscribe because, again, I'm not sure how much better it can get. The way that we've breaking down markets, given fundamentals, gave you guys this live trade setup on gold. We watched it play out live here as well while still breaking down other market conditions too. Amazing stuff. Nilabh, thank you for your time and for coming on
Anytime,
these
man.
shows on
Yeah.
Tuesday.
Thank you so much for having me on, man.
Absolutely, bro. Guys, hit that like and subscribe, and we'll see you guys on Thursday with me and Jeeve, and we'll be going over markets and